Good morning, everybody. It's Monday, May 15th, 5:29 a.m. Central Time as I speak here. July corn futures up 4 3/4 at 591. July soybeans up 9 1/4 at 13.99 1/4. July Chicago wheat up 14 1/4 at 649 1/4. July Kansas City wheat up 24.5 cents at 901 1/2. July spring wheat up 17.5 at 863 1/2. I should say that both December corn and November soybean futures printed some fresh multi-month lows overnight. Mackenzie, let's get started with this USDA report and these big corn and soybean yields that are being projected.
So, USDA projected record U.S. corn and soybean yields on Friday. The government stuck with its February baseline projections in regard to both crops. The 2023 U.S. corn yield was pegged at 181.5 bushels per acre, a number that would eclipse the previous record by nearly 5 bushels per acre. The soybean yield was pegged at 52 bushels per acre versus the previous record of 51.9 bushels per acre. The numbers assume normal weather and trend improvement versus prior years.
Few things here. So USDA kind of did what they normally do. They stuck with the February outlook numbers for the yields. So none of this was surprising. I know that these numbers, when you look at this versus the average trade guess, it's a little bit higher, but it makes no difference. This is what was expected. The previous record corn yield was 2021, and it was 176.7. So some people might look at this and say, you know what, an increase of almost 5 bushels versus the previous record is a stretch. And other people would say, no, that's where the trend line is. And you know what? We've actually got potential to go beyond that if things work out well. The record for soybeans was 51.9, and that was all the way back in 2016. So it's been done before that we've done, something close to 52. It's certainly a possibility. Everything that we've got here in terms of U.S. weather, or U.S. yield prospects, rather, it's all contingent on weather. I mean, for this stuff to be realized, guys, you know that you need weather to cooperate here the next few months. So we're just getting started. USDA has to start somewhere with these yield numbers, and this is kind of the place that they picked. So December corn futures did post some fresh lows overnight. We traded down to 503 and change, I believe, and this may be different by the time you guys watch this or listen. And that's the lowest since January of 2022, I believe, for Dece corn. November soybeans, some similarly ugly stuff. We bottomed kind of like a double bottom type deal, right where we bottomed out in July of last year at about 12.17 November beans. And again, this may be different by the time you guys see this.
Abandonment of U.S. winter wheat acres will be the highest in more than 100 years. USDA projects that only 67% of U.S. winter wheat acres will be harvested for grain, the lowest rate since 1917. A severe drought in the U.S. Southern Plains is responsible for the high abandonment rate. The U.S. hard red winter wheat crop was pegged at 514 million bushels versus the pre-report trade estimate of 591 million bushels.
Great chart from Bloomberg up on my screen here. Highest abandonment rate since 1917. I actually think this was the biggest surprise in the report was this HRW wheat production number. So this would be the lightest crop since 1957 for HRW wheat if confirmed. I went on the USDA website. I had to scroll way down to find that one. So those of you guys in the Southern Plains, you're probably looking at this and saying, yeah, Joe, I could have told you that, right? And the market has rallied on this, absolutely. No doubt about it. HRW wheat futures kind of leading the charge here in the wheat market, actually the strongest leg of the grain complex here. But it's all about expectations versus reality. And the reality of what USDA printed was quite a bit more friendly than what the trade had expected, I suppose. Kansas City wheat futures acting awfully well this morning into some fresh multi-month highs. We were above $9 at one point, and this again will be different by the time you guys see it. This thing's rallied. This July Kansas City wheat contract, it's rallied like $1.60 per bushel just the last 2 weeks. Pretty impressive action here. What about South America?
So, USDA continues to project huge South American crops. The government raised its estimate for this year's Brazilian corn crop to 130 million metric tons from 125 million metric tons previously. This year's Brazilian soybean crop was pegged at a record 155 million metric tons. Next year's Brazilian soybean crop was pegged at a whopping 163 million metric tons. Argentina's corn and soybean production is projected to bounce back in 2024 following a year of devastating drought.
So for this year's crops, USDA kind of went out on their own here. They've got the Brazilian corn crop at 130. CONAB was out last week and printed 125 and a half. So USDA is quite a bit more optimistic than the Brazilian government in regard to this year's corn crop. When you look out to next year, South American crops that'll be planted this fall, we're talking another record in terms of South American or Brazilian soybeans, rather, 163 million. They're talking, I think, like 112 million acres. In regard to Argentina, essentially they're thinking, hey, Argentina is going to bounce back from the drought, and that may or may not be the real deal, but that is the starting point here, at least as far as USDA is concerned. So these world ending stocks, pretty ugly and quite a bit better, or quite a bit larger than what anybody had projected here, certainly.
USDA reduced its projections for this year's U.S. corn exports. The export estimate was cut by 75 million bushels. The poor pace of sales and shipments, paired with recent Chinese cancellations, made the change necessary. Some traders argue that further reductions are forthcoming. USDA left the corn demand via ethanol estimate unchanged on the old crop U.S. Balance sheet.
Okay, so we knew that this was coming, that USDA was going to come down with this corn export number for the current marketing year. That's not a surprise. It may need to come down further. They did not touch the ethanol number, which is something that also may need to come down in future reports. So I'm still of the opinion that this old crop corn carryout estimate that they printed, 1.417, I think that number will ultimately be higher. I think it's going to be closer to 1.5, somewhere in that neighborhood. When it comes to demand for new crop corn and soybeans, guys, USDA is projecting a really big increase in new crop corn demand. So I'll tell you that, to go back to the crop production estimates, that stuff is all contingent on weather, right? Well, these demand estimates are contingent on big crops and cheap prices. And if you have higher prices, you may not get these demand numbers. So I look at this new crop corn balance sheet in particular. It's just tough. It's tough to paint a friendly picture here, given what USDA has told us to this point. And that could change, of course.
So if you guys are not already subscribed to our premium content, you sure need to do so. Joe, would you like to go over what we put out on Friday?
Very quickly, report day is a great day to be a premium subscriber. I've got a video snapshot of the report sent out via text message within about 20 minutes of the report, typically. I think it was out within 20 minutes on Friday. And then tons of follow-up stuff in the newsletter the following day, which would have been today. If you guys want to see all the premium videos, new one every single business day, go to standardgrain.com. You can sign up this morning with your credit card. It takes about 1 minute on your phone or computer. $50 a month, cancel it anytime. No other fee, no other obligation. Nobody will try to sell you anything else, guys.
So the Black Sea grain deal has not been extended. A Ukrainian official said overnight that his country cannot rule an end to the current deal on Thursday, and that no more talks are scheduled this week. On Thursday last week, the Kremlin said that Putin could speak with Turkey's president on short notice if necessary. On Friday, the Kremlin went on to say that a call would resolve the grain deal deadlock.
Yeah, so no, he said, I think I mistyped there. They said that it would not resolve the deadlock. In any case, this is probably part of the reason your wheat futures are up today. I think that there's also some follow through after the bullish HRW production estimate in particular. So the wheat market actually has something going for it for a change. It was a long ride down, and now you've got a little bit of a recovery here, certainly. Probably some short covering as well.
Large money managers remain net short the corn market. CFTC released weekly commitment of traders data on Friday. During the week ending May 9th, the funds were net buyers of 7,000 contracts of corn. They were net sellers of 5,000 contracts of soybeans, and they were net buyers of 8,000 contracts of SRW wheat for the week.
I just wonder how long they'll stick with this net long in the soybean market. I mean, a lot of this will be contingent on weather, but now you've got, I wouldn't call it a huge net short in the corn market, but it's a substantial net short in the corn market, a very substantial net short in the SRW wheat and soybeans. They're still long. That's the market out of the three that probably has the best story fundamentally in real time, and I suppose that's why that's kind of the long leg of their position here. But in any case, the sentiment among large money managers when it comes to just about every commodity, with a few exceptions, has really soured here.
The National Oilseed Processors Association will release April crush data here this morning. The report will be released at 11 a.m. Central Time. Ahead of the report, traders estimate that NOPA members crushed 174.2 million bushels of soybeans in April. If confirmed, this would be a record print for the month of April. U.S. crush margins remain strong but have declined since peaking earlier this year.
So crush margins are still very good. You're going to see probably a record print this month. You're probably going to see record prints for months to come. USDA did acknowledge in its new crop balance sheets here some crush expansion, an additional 90 million bushels of crush being projected in the new crop marketing year, and that is definitely a nod to these new crush plants and crush expansion that's taking place. In the same breath, though, USDA reduced its export projection for the new crop marketing year, I think, by 30 million. So we're going to start to, we've talked about this a lot, but you're going to start to see this shift away from the export market and toward more domestic demand in regard to soybeans grown here in the United States.
JBS South America has reported a net loss in the first quarter. Shares of Brazil-based JBS South America dropped by more than 10% in early trade on Friday after the company reported a net loss of 304 million during the first quarter. Last year, during the same quarter, JBS, which is known for being the world's largest meat processor, reported a net income of $1.04 billion. This is the first time the company has dealt with difficulties in all the countries where it operates. Losses for the quarter were attributed to higher grain prices and lower export prices in Brazil, as well as higher cattle costs in the U.S. The report comes just days after Tyson Foods posted a second quarter loss and cut its full year revenue forecast.
Yeah, I was going to say we had this exact same story for Tyson. Like, was it last week or 2 weeks ago?
It was last week, yeah.
So this will be the trend here for a while, is that these packers are going to have some problems.
Yeah, they're going to have some issues with margins. They might lose a little money, but I'm pretty sure they'll be okay.
Yeah, I think they're going to be just fine. Maybe just a kind of a bump in the road here until this cattle market and everything else corrects itself. What did the cattle market do last week?
Yeah, so live and feeder cattle futures were quite snappy on Friday. Feeder cattle futures were up an average of 220 on Friday. On the week, they were up $6.53. Live cattle futures closed an average of 102 of $1.02 higher on Friday. On the week, they were up an average of 227. Cash cattle trade was steady to lower last week. Up here in the north, fat sold at mostly 176 to 177. That was steady with the prior week. In the south, fat cattle traded at mostly 170. That was down $2 from the previous week. Choice box beef ended the day on Friday at 304.61. That was down $4.93 on the week. Select box beef closed Friday at 284.68. That was down 78 cents for the week.
Outside markets to start off this morning, guys. U.S. dollars just a little bit lower. Stock market's up. The S&P's up 15. The Dow Jones up 120. Bonds are off a little bit. Gold and silver mixed. Crude oil is up 23 cents in the June WTI. 70.25 last trade. Was below 70 at one point overnight. Everybody have a great day today. We'll talk to you Tuesday.